Hello, hello everyone, and welcome to this another panel at this year's Shift Money. In very unique circumstances, we're all here in the middle of 2020. That is a very interesting year indeed. And we're here with a panel of a slightly ominous title, FinTech Prophecies, Startup versus Banks or Startups and Banks. I'm very happy to have this distinguished panel of guests with me today. And I'm going to just go around for a little bit and have a round of introduction just to tell us what you do, what your companies do, and what your role in them is. Shall we start from this side, Mislav?
Sure.
Thank you, welcome.
Well, thanks for the invitation first to this panel. My name is Mislav. I am the CEO of AMPnet, and we're a startup working in the blockchain space, enabling easy tokenization of arbitrary assets in jurisdictions all over the world using cooperative law as a tokenization platform.
Thank you, Mislav. Marijana.
Hi to everyone. I'm Marijana Dumancic. I work as a product owner at LAQO in Croatia Osiguranje. LAQO is 100% Croatian digital insurance in Croatia.
Perfect, thank you, Marijana. Roberto, your role.
So good afternoon, my name is Roberto Bitunjac. I'm the board member of Sberbank Croatia. I'm responsible for the technology and operation stream in the bank. And Sberbank Croatia is the member of the ownership of one of the largest banking groups in the world, is the Russian Sberbank.
Thank you, Roberto. And Josipa.
Josipa Majic, CEO and co-founder of Revuto. We're a subscription management solution.
Perfect. Thank you. So, as I said, this is a panel about, startups and banks and financial institutions. We're going to talk a little bit about what type of interaction are those between those two types of institutions. But we're also going to talk about how people perceive these different types of institutions and companies. So there is a difference if a product, especially a financial product, is released by a, let's call it a hip, young startup, and then a major financial institution, an insurance company or investment bank. What is, in your perception, the difference, how people perceive these products? What attributes they give to one or other type of the products? Who wants to take this kind of vague question at the beginning? Who wants to start?
Well, I can take it. Well, I think, there has been a shift for a reason that a lot of banks these days and a lot of large corporations, they're issuing new products under new brands, which are only loosely connected to, the parent company and the parent brand. We have seen this all over the world with tons of products, and there is a reason behind that. We tend to associate large companies with bureaucracy or inefficiency or whatever, and the new model that has started appearing is company building within a company, where an entity will work semi-autonomously under a different brand, under different management, they would just loosely actually be responsible for the management of the company. This model is actually not new. It has been pioneered in the 1970s by Bell Labs in the United States, but I think it has only now taken hold a bit more dramatically. So I think there has been a very, very striking difference in perception when, let's say, a large bank would issue a new innovative product. It would be
a different brand as well, perhaps.
But if they would do it under their own brand, it would be seen as possibly, outdated, antiquated, inefficient. But if they would do it under a different brand, but with their name under it, then that's the best of both worlds. You get the security and kind of guarantees that everything is compliant from the large corporation.
It's also cool in a way.
Yeah, and it's also, you got to have a big brand somewhere, in your product, and the corporations there have an advantage that they have themselves. But if they do it under also some specific brand, then I think that's a perceptual win situation for them.
Perfect. I think we have a perfect person to follow up, Marijana, who tell us a little bit about LAQO, the product, and for our and also about Croatia Osiguranje for our audience maybe outside of Croatia. It's a major insurance company here, right?
Yes, LAQO is in fact a product that is built from both backgrounds. From Croatia Osiguranje with his background and on this project, we worked together with the CEO college who had great experience and knowledge on the one hand, and the other hand we have the company joined colleagues that join only because of the LAQO. The disruptive mindset of these people bring the new perspective, and this is the crucial for this. On the one hand, we have the experience and knowledge, and on the other hand, we have a different approach to the new way of build such a product like LAQO.
And you only recently launched in Croatia. Are you happy with the results so far?
Yes, the launch was 2 months ago, and great results we have for now.
Also, so we see everywhere big insurance companies coming up with, as Mislav said, very, I say, different branding products that are also appealing to wider audience. Roberto, from a position of, as you said, one of the world's major banks.
I would say from my side, there's always two sides of the medals. Yeah? From one side, when you see the corporates, you see some trust in this project, you see these security things are ensured and so on. So basically also when targeting different customer groups, yeah? So maybe for some younger customers, they also require some new brand that will differentiate, let's say, the old traditional corporate and looking something new like LAQO or some other, let's say, brands that the corporates are making. So I think the right mix must be found between these. And what I would like to mention that when the product is launched by a startup or FinTech, I would say the main difference is there is more accent on the customer experience, on the customer journey. Yeah? And I think the corporates are staying a little bit behind. So we have to be faster, we have to be more agile, let's say, to catch up on this and give also more focus on the customer journey and the overall customer experience.
And this is purely my opinion. I think the corporates have been catching up with, especially with the part that you said, customer experience, customer journey. Do you think are catching up fast enough, or they should catch up faster?
I'm thinking they are catching up every day faster and faster because they are aware there is a change going on, and I think all the big corporates are aware that they have to be more agile and more faster in this.
Perfect. Thank you. Josipa, as a startup, a pure startup, let's call it this way, what did you learn or not learn, or learn what not to do from looking at the corporates, for example, especially in your space, of course?
Absolutely. So I think, addressing what startups can do is kind of impossible without addressing what the VC industry has done for startups, which has allowed them really to run at incredible speed, but also to generate losses in order to deliver the supreme customer experience that they're used to. So the difference with big corporates is that corporates are a much older business than VC is. So VC is still a relatively new experiment, and it's been funding this really prominent growth of startups. So what's happening is that, as you said, banks have a very diverse set of customers they have to serve, and a very diverse set of stakeholders. So it's really a marathon for them. Whereas for startups, it's let's raise a bunch of money, let's do this very expensive experiment, and if we win it all. But if we lose, we don't have that much skin in the game, at least if you're a super well-funded VC-backed startup. So you get to really do all of these very expensive experiments and really look for the best possible product on the market. And what's happening as a result is that, for example, in the FinTech space, some of the biggest names have been running negative margins and still do. So, big names like Revuto, like Monzo, like Nubank, they're really all quite, they don't have profits yet. So it's this big experiment. And that's been happening in the FinTech space. But I think if we look at case studies outside of the FinTech space, for example, what Amazon has did in the retail space, it looks like the winner will be the company that gets to take the best of both worlds. So perhaps a startup that at some point starts to serve a more diverse set of customers, so not only a niche market and not only super expensive experiments, or a corporate that adopts that mindset and, with these entrepreneur initiatives builds a culture that is more long-lasting to do these types of experiments.
I think we can ask the same question to Mislav. as a startup here.
Yeah, I just wanted to add a little bit to this existing discussion is, I think one of the reasons that you know, user experience generally, user onboarding, user journey from like lead to customer to paying customer to maybe even someday a profitable customer is...
It's a common startup problem.
Yeah, yeah, well, you know, as mentioned, you have to lose money to make money. So that's a big thing about startups. But I think, you know, this journey is a highly iterative process. I can tell you from our experience, you know, we've been working for 3 years and now we are launching. In these 3 years, the company has changed shape more than you could ever imagine. It doesn't even resemble what it was when we started 3 years ago. So I will just give you one example. 3 years ago, we started as a company that was trying to solve the issue of aligning electricity costs, peer-to-peer electricity costs among closed-off energy communities. And now we are working on tokenizing arbitrary assets, and we're a purely fintech startup. So how did this journey happen is that we started tokenizing electricity sources, and then we realized, look, there is a whole market to tokenize various things beyond electricity sources, and then we just sat down one day and decided that we're no longer doing what we were doing, we're doing this other thing. If a corporate project were to try something like this, they would have zero, so you know, we tend to be, how would I say it best, we can always align ourselves with the needs of the market, whatever the cost may be. There is nothing tethering us to a decision. If a decision has been made, that decision can be broken next day or next week. Nobody cares. So, you know, when we get the users, when we see how they are interacting with our UI, if it doesn't work quite as well, we'll break the entire UI and build a whole new one just to make it, you know, 10% better. So
I think one word that comes to mind as you're speaking to me, it's pivoting. Pivoting is something that startups use all the time, and this is something. Roberto, do you think what Mislav said here, that actually the pivot part, the adjusting part, is still something that startups are much better at than corporates?
I fully agree, and I like it really by the startup. I call it fail fast and readjust fast, and this is something that the corporates have to learn still. So this is really what I like in the startup industry. Yeah.
Marijana, you are kind of wearing a little bit of both hats in this situation. You're one of those, as you explained, startups within a corporate. What did you learn, still growing in a corporate environment, what did you learn, or what did you bring into this, let's call it in-house startup?
The main thing was when we started with this project 12 months ago, from the scratch. So we did.
It only took you 10 months to.
Yes.
Okay.
Yes.
That's pretty impressive, I have to say.
Yes, it was very tough, but we did it. We have to go through processes and to see, okay, how to make it simpler, how to make it faster, to make it more efficient for all. But on the other hand, we build the new product with experience to the customer and the knowledge of the CEO colleagues who work together with us. So we learned from each other on both hands. So I think that one of the biggest challenges for us was to, okay, we have a little time and we need to develop something that will accept total for both worlds, from customer's view and from the company view. So support of the management is also important. We need to have a company management that is open to accept a different approach, to make a change and to make some progression with the market also.
I think, I don't know if you guys, I think so what you're saying is we are having, like, you have to have this top-down support in a larger organization in order to even succeed or start succeeding in building such an in-house organization or in-house innovation, right? Anyway, Josipa, have you, as a very, let's say, with a fintech product, with a financial product, have you had a chance to, so far, interact with larger financial institutions, with banks, or what have you?
Well, with this company, we do have some partners, but with my other company that's actually been serving big banks and kind of the more traditional clients in the market, I have had quite a bit of exposure with them. And I would say, you know, as
a little bit to combine them and see where they can work together, maybe where they can't work together. Do you, Mislav, maybe you, your product is, I would say, very new. Right now, it's tokenization, it's blockchain related, so this is fairly new technology. Let's call it this way. When you talk to larger financial institutions at an event like this, when you talk to banks, how do they react to your product? Do they say, okay, oh, this is something we should have done, or I guess not? Or...
Well, not really. You know, there's a reason that traditional institutions don't serve the market that we serve. So the clients that we usually serve are clients that, for one reason or the other, were not extremely interesting to banks.
Why is that?
Well, you know, we do not discriminate on the types of clients and the types of services. So there is 1,000 reasons. Some of them might be just that it's too high a risk of an investment. You know, like banks don't invest in startups. They just don't. And if a startup wants to tokenize their capital through our platform, they can do it, you know, and if they can find the investors, if they can find people willing to put the money down, they can do it. So I think, you know, when we speak with people from these legacy sectors, they understand that, you know, most of their core business is not being attacked by us. We found an underserved market, which for one reason or the other, they had no need or desire to serve. And we built a product for them. Now, what happens through time is that the product develops, becomes more mature, and then it starts to eat into the existing legacy markets. This is what happened with us and with the investments in renewable energy. So one of our biggest clients is Greenpeace, and we are working with them to, you know, we're hoping to place around $150, $200 million in investments into renewable energy sources throughout Europe in the next year or 2 years. And so this has been traditionally the world of banks, you know, large investments into renewable energy. And that's what I mentioned at the beginning. You know, you can have your startup, but below the startup, you have to have a recognizable name. Luckily for us, we found Greenpeace. So, you know, if we were going at it alone, if it was just AMPnet tries to place $150 million in investments, that would be dead on arrival. Nobody would, it would seem ridiculous. But then when you have a company of large size, or maybe even a bank or a large brand, then, you know, that moves in the direction where you can, you know, do something useful. So yeah, but they understand the product. They think we're not a danger. And then couple of years down the line, we become a danger.
That seems. I almost want to say I heard that story before.
Yeah.
in different products and different verticals. Roberto, what Mislav said here. Do banks invest in startups? Or if you met Mislav at a conference like this, would it cross your mind? Oh, this is a super cool product. We want to do this, but we can't. Or maybe we should do this. What would be your reaction?
Yeah, I can say here...
Or Josipa's product,
yeah,
sorry.
For Sberbank Croatia, currently, we are not looking to buy or to invest in but what we are looking for is partnership, yeah? Because I think the new generation of banking, that the bank should stream for an ecosystem. And it's not only about startups, it's also about retail industry, it's also about other financials like insurance. So, for example, my customer said, why should I not buy an insurance policy also in my app? Also from the other side, maybe in the insurance app, I would ask for a loan, yeah? So I think it's interconnectivity and to make some kind of partnership platform and utilize all the aspects. This means who has the customer, who has the network, who has also the technology, and leverage this together, yeah, in the platform.
I like this holistic approach to the ecosystem as well. I think this is This is to support the banks here a little bit. I think this is something startups sometimes disregard as well. I don't know if Mislav agrees with me, but
No, I agree.
or Josipa as well. Do you think this is? Do you like basically contributing to the same ecosystem with? I know you're different level of playing fields, but do you see the value brought by the banks as well, perhaps, to the ecosystem?
Absolutely. Absolutely. I actually think, personally, I have a lot of respect for banks because, as I said, they run a much more complex business. We as startups, we get to serve these niche markets that are fast growing, and that's always a much more elegant thing to do than to serve, the same, for example, you get to serve people who are 70 plus years old, but you also have to create a product that's interesting to the 18-year-old. And that's a very layered and complex task. So I would agree that the approach of really nurturing that channel and then creating an ecosystem kind of brings the best from each of everyone's kind of skill stack, because we as startups, we get to innovate within the niche that we are serving, that we know so well. And the bank gets to really nurture the channel and everything that goes around it. Because, for example, the classical thing where a startup would fail and a bank would do really well is anything that dealing with post-sales activities. So, anything that what happens after the transaction, what happens after you have a problem. Banks have a very robust system of how do they react to that. And regardless of, as I said, if you're a very tech-literate consumer or if you're someone who's completely tech-illiterate, and you want to speak to a genuine person, you want to go to the counter, you want to see a human face. So I think banks do a really good job at serving that in the long run. But because of that, they don't have the luxury of serving these niches that we do.
I see. So I think, yeah, this is exactly why this kind of, I guess, events and occurrences are good, because we cover kind of a vertical market here. But one more thing, maybe Josipa, as well for you, we can start there. Have you had any, as I would say, younger startup with a new, let's call it a sexy product on the market as well? What is your interaction with the regulators, for example, with the public sector?
So I have a limited experience with regulators, I have to say. I think that's probably a better question for someone who's out there doing and getting the licenses themselves. We're lucky to have really good bank partners that support us in that journey. But I think the regulators, they really have a not so easy task. So if you take the same approach of what's been happening in FinTech and, for example, apply it to media or what's been happening with big tech, you really realize that the slack that the regulators have is a big one. In front of everyone of the industry, we do have a big role of how do we educate the regulators, but without scaring them in a way that just makes them become more defensive and really limits the market. So I think all regulators, not only those in FinTech, have a quite difficult challenge where they have to get educated in parallel with designing high quality policy with all of the stakeholders. So I think it's much more easier said than done. So I would say that what it seems to me is that the local regulators are doing the best that they can with their ability, but that's really a question that's not only local, it's global, and it's not limited to the FinTech sector. It's actually a broader issue of what do we do with lagging regulation everywhere.
Yeah, I think regulators often get too hard of a time a little bit, but maybe my background a long time ago is a bit regulatory, so I'm a bit biased as well there. I think this is going to be a super interesting question for Mislav as well, but I know Marijana had a regulatory experience just a little bit now, just here in the lobby of our event, but talking to regulators as well, obviously from the, in this case, perspective of the insurance provider, how, and providing a new digital product on a platform that is a well-established brand, as we discussed before. How did you interact with regulators? Was it something seamless, or was it something that they had to really wrap their head around? Like, oh, what are you doing now? Are you offering a digital product? What is that? You know?
I think that what will surprise many is that regulators are willing to accept a different approach and arguments in favor of it. They should be as active partner for digitalization of the market. So we had great experience with that. I think that we should always have some arguments backed by strong facts to cooperation with them on any kind of product.
Did you, when you started to work on the product, did you already were in contact with the regulators, or is it something that you thought about later, in case of LAQO?
From the very start, no, because first we start from scratch. Yeah? We have only idea, then we go through the product. But after a few months, we start to work with them on this new approach of digital insurance.
And you're happy with the interaction, you're happy with how they talk to you, the interest in the product. Is this all satisfying to you?
Yes, it was satisfying to us.
It's good. It's good to hear
We have good
a startup and a corporate
yes.
happy with the regulator as well. I think the tides are changing there. Mislav, what a very interesting tokenization platform. How do you work with regulators?
You know, our idea from the very beginning was to be fully compliant with everything, but we don't really have a budget to invest into, you know, the full mechanism of obtaining a license, of going through this entire process. Or if we do have a budget, that would take like 70% of our budget and take far too much time. So, you know, I think as a startup, you need to, as well as you're innovating in the field of technology, you need to innovate with compliance also. So one of our distinctions was that we actually went away from the classical, you know, investment fund model towards a cooperative funding model. You know, we found, just for an example, 1 in 5 people in the European Union is a member of a cooperative. And, you know, cooperatives have been traditionally raising billions, tens of billions of euros for various types of projects in agriculture, renewable energy, housing, or anything else. And, you know, we saw that, you know, since this market, you know, 10 billion is not a lot of money in investment terms. If you take the entire Europe, for example, you know, it sounds like a lot, but, you know, that's still a niche market. And, you know, usually startups would just scoot around cooperatives. Nobody would really care enough because it seemed like too small of a market to saturate. What we thought was, well, look, this market has an easier approach towards compliance, towards regulation. They do not have to obtain so much licenses. They can kind of scoot around a bit more freely.
Do you think you found a loophole?
It's not a loophole. It's an intentional consequence of the cooperative law. It's a very, very clearly stated, very, very intentional part of cooperative law. But it has just been underserved technologically so far. So there has not been a fintech startup serving this market. Okay. And I think if you, as a startup, go the full compliance route, like just right away, that's going to be difficult to do, and you're most likely going to fail. So you have 2 options. Either you take the simpler compliance route, or you take a partner who already has compliance and work with them.
Roberto, from your perspective as a bank, do you think it's slightly unfair how regulators treat larger financial institutions as opposed to new startups? You know, you have all the, as Josipa said as well, you had all the burdens, all the reportings, all the capital requirements, you name it. You know, compliance departments is probably huge in every bank. Do you think you have a disadvantage in a start to innovate because of that?
I think also the regulations are changing. So we have now the open banking regulations on the level of European Union. I think that's a great opportunity for startup fintechs
but for banks as well, right?
Yeah. Yeah. To apply for a license, for an ISP, PSP license, and start working with the bank. I think also startups can always approach a bank, speak, understand better the regulatory framework. But I think also in Croatia, what's important, the National Bank, our central bank, has also an innovation hub where they can also apply, ask some questions, understand better the regulatory framework. Because I think that's very important, that the startup must understand this, and then the corporates are there to help understanding and pushing, but the startup must be aware that the regulatory framework must be fulfilled. I had personally opportunity to work with one startup, and it was a little bit hard to understand this regulatory technical standard, the secure customer authentication. It needed some time, yeah? So I encourage all the startups to learn about this, to approach the central bank, to approach the banking sector, ask for some help, understanding, but only on this way, together, we can do it on the right way.
Yesterday, great that you mentioned that. It's a great segue to my next question. yesterday we had a governor of the Central Bank of Croatia here on stage, the Governor Vucic, and he said they have the sandbox, the regulatory framework. They wanna work with startups, and he suggested that all startups with obviously in the financial sector should contact them. This is why I asked the question before immediately, to see if what you guys are doing is viable. Do you agree with this, or do you think maybe Josipa, maybe it should be at a later stage, maybe not from day one?
I think, ideally, they should behave in a way that caters each stage. As you pointed out, if you're an early stage startup, you're still kind of at the wireframe phase. There's a lot of experimentation that's going on, and there's a lot of pivoting. So having someone who understands how early stage companies work, that would be ideal. But to your point, someone who is a growth stage company has a completely different set of problems, and they're already, in kind of if there are any problems, they're already full scale. So they need someone to help them really calm those fires and just make sure that they manage, manage all the negative consequences that they have. So I would say in an ideal scenario, within the sandbox, there would be a diversification of what it means to be an early stage and what it means to be late stage. Because if you already have customers, you're already serving them, and there's a regulation that you're breaching, it's a completely different set of procedures than if you're an early stage startup and you want to attack a certain market. So ideally it would be someone who really understands all the differences and nuances that go along with that, and also who understands the fact that many of the startups, the one luxury that they don't have, which corporates do, is time. So I usually see, people who tend to work in the regulator space, they really are detail oriented, and they want to, their interests are aligned in a way so that they don't make mistakes. Whereas for startups, interests are aligned in order to ship as fast as possible and to get the product out on the market. So aligning those incentives in a way so that the regulators understand that, every second is actually quite pivotal for the company, that would be ideal.
I can definitely see the frustration with, and you said like with the compliance department and the budgets and so on.
But I would say that it's a bit of a malformed question about asking the bank whether a product is viable, because
You mean the central bank, right?
Whoever the regulator of the specific authority is, because every product is viable at a certain level of regulation. I don't think compliance wasn't even built in a way that it says, look, you're not allowed to do this or this or this. It will usually, if you want to do this, you have to have these types of accreditations. This is your security, this is your etc. Except if you're defrauding people. But if you're not defrauding people, your idea is generally viable, whatever it might be. So I think the approach for startups is act in good faith. Take a reasonable approach of what you think, that you are not scamming anyone, you are not defrauding anyone, you are not opening anyone for potential fraud attacks or whatever. And then when time comes for compliance, which has been seen over and over again, specifically in the space we work in blockchain, you will sit down with the compliance, authorities, and you will figure out a solution which satisfies both parties. So, they will not tell you ever, I think, that a solution is not viable. They'll just tell you, we need to regulate it somehow.
So we see that often regulators are trying to create the framework, right? But as you said, and both of you said, I think it's very often a case-by-case approach from both sides, right? A regulator and the startup, or a corporate. Marijana, you said you guys are basically a startup within a corporate. You started very recently, 10 months ago, you said. You launched 2 months ago. It is pretty impressive, and the product is out. People are using it now, and you're happy with the results. Are you growing? What is your expectations for growth? Is it the same trajectory of growth as a startup would have? We were talking, Josipa mentioned Revuto or Monzo's. Is it along the same lines? Or is it exponential growth as well?
Yes, we expect exponential growth, but yes, we are like a small startup. We start from the scratch, from the 0 customers, and now the customer base is building as time is going. So from this view, we are same as a startup within Croatia Osiguranje.
And I don't want to go back to regulation. We talked a little bit. Do you within LAQO have let's say, a compliance department as well, or is it part of the Croatia Osiguranje part that does that?
It is a part of Croatia Osiguranje compliance. Yes.
Interesting. Roberto, you said you worked with a startup recently, right? How did this work out for you? I don't know what startup is or if you can talk about it, but also maybe a question is more general in terms, what is your ideal interaction from a perspective of a bank with a startup? You know, maybe, I know this can be different answers. You can say, you know, we want to acquire successful startups. Yeah. Maybe we want to invest in potentially successful startups. What do you see as a perfect type of collaboration from your perspective?
I would say an open partnership, but defining the governance framework of this cooperation. We mentioned here a few things, so maybe I will repeat myself a little. So there is a big culture shift. And you know, I always say, culture eats strategy for breakfast.
I fully agree.
And so to see this culture shift, how this can become an advantage in this partnership. So we have to address. Second point is this regulatory understanding. But also there is also on technology a difference, yeah? Which technology the startup use, how the corporates are using. We have to find the same language when we talk about technology, and then of course to have a strong sponsorship, yeah? A mutual buy-in from both sides, because without this strong buy-in and understanding, it will not fly. Yeah?
And since we're in this startups and corporates part of the discussion, Josipa, are you planning to raise money for your startup at the moment? Or
Yes, we do.
Would you rather raise money, this is a bit of a loaded question, but would you rather raise money from an experienced venture capital or from a corporate venture capital? Like it can be a bank or...
That is a loaded question, and the reason why is because if we talk about CVC, so the corporate venture capital funds, it really depends on what strategy do they have. So to give you an example, some of them are investing money out of their balance sheet, and they have, you know, just opportunistically they want to invest in companies that are in the space and fast growing. But some have very strategic goals that they want to you know, tick, and they don't want to go any further from that. So if you raise from one or the other CVC, it really operationally differs quite a bit. And the classical example here would be if you invest, say, from a corporate venture capital arm of a bank that is investing from their balance sheet, they want to do strategic stuff, but then you want to raise money for a different product roadmap that's changed, as Mislav said, because that's just the nature of our business. They might, you know, create some problems, or they might not agree with that roadmap. So I would say, depending on what's the mission and the vision and how the cultures, how they combine together, because I agree completely, the cultures of startups are something that in the short term is very nice and healthy, but in the long run is quite a bit of a challenge to maintain as well, which we've seen in the big tech as they mature. But the answer to that question would be, it really depends on the roadmap. So if your roadmap is very strategic, you know that at some point in time, you'll need a big regulator, you'll need their infrastructure, their post-sales support, even their shareholders' access to capital, then that makes a lot of sense. If, on the other side, you're either unsure of your roadmap or you think the road is a bit blurry, then I think raising from a professional VC, not only because of their appetite for risk and their stomach for very, very bumpy roads and roadmaps, but also because of their connections and the way of solving these things. So typically, an experienced VC will have a stack of not only skills, but people in the network who they can connect you to and call if you need help, whereas the bank will typically kind of go back to the standard way of doing things. So if you have a problem, this is how we solve it in the banking sector, whereas a professional VC will say, let's call up a bunch of smart people from big tech and let's ask them how this was solved in their industry and what might be applicable for FinTech. So I would say kind of the answer would be, if you have a strategic roadmap, going down the CVC route of a bank makes a ton of sense. But if it's either something that's more opportunistically or something that's still TBD, professional VC makes more sense.
I mean, Sberbank is a major global bank. I'm just saying, can open a lot of markets. I'm sure you guys can talk about this later. Mislav, similar question. I mean, I completely agree with Josipa, by the way. There are good VCs and bad VCs probably, and good CVCs and bad CVCs. And the strategies have to click always. I always suggest that. But Mislav, you're going to raise another round soon, right?
Yeah,
what is your opinion?
We are currently in the process of raising another round. However, our current round is something that traditional VCs, so we already have raised 3 rounds of funding so far with the total of around $700,000, but now we need really the scaling money because we have built the product, we have a customer base, we have launched, and now we need essentially funds to scale this thing to be where it needs to be. And we have decided with the latest developments in the decentralized finance sector with blockchain and everything going on, so we are essentially issuing something that's called a governance token. So we are building a network where anyone will be able to tokenize, you know, their, as I mentioned, company equity, renewable energy, commercial real estate, housing, or something else. But essentially, we want to, those thousands and thousands of people who are using our platform to tokenize their whatever, we want to combine them and allow them to trade these assets amongst themselves. We want to create a liquid market, and you know, that's where we are trying to connect with banks. We need somebody on the other side to act as a liquidity provider for our marketplace, and I think that's a very good opportunity for banks to have a cheap source of assets that have passed due diligence and that have shown, you know, good, stable returns. But essentially, what we are doing now is we are issuing a token which is going to be run on blockchain, which is going to represent a fraction of earnings of our network. So all of those tokenizers, when they are trading, they have to pay a fee. A fraction of this fee, essentially 100% of this fee, is distributed to people holding the token which we are now selling. So yeah, we are now selling something of like a 30% stake in this token. Which will hopefully by March or April be listed on a decentralized exchange. So that's a whole other world from what we are used to, like VCs and this question, you know, classic VCs or corporate VCs. You know, if classical VC is too crazy for corporate VCs, then token sales are too crazy for classic VCs.
One step up, right?
Well, I think, you know, in our case, with my company specifically, we have very little choice in being in any way stagnant. We have to be 5 steps ahead, and we have to think what the world is going to look like in 10, 15 years. We can't work on what's going on now, because there's always going to be someone crazier, somebody thinking 3 steps further than us, and we have to keep pace. That's an ongoing race. So yeah, we're doing a token sale as a fundraising endeavor this time around.
I like the attitude, and that's pretty impressive. Quick question, I'm going to split you in 2 groups, the corporate group and the startup group. So Josipa, Mislav, and Roberto and Marijana. To the startup group, would you, it's also a hard question, but maybe if you have to answer, would you rather hire people with exclusively corporate background or exclusively startup background?
From here, okay. Well, myself, I have hired people with exclusively startup backgrounds, so.
Josipa?
So for partnerships and regulators position, people with a corporate background. For product and for roadmap, for fundraise, exclusively startup background.
Same question for the corporate T group in the middle.
I can tell for myself. So we have a lot of people with understanding the regulatory and the corporate mindset, but we need people with a startup background. Yeah.
Yes, I would say that the startup mindset is the crucial here. So it could be a corporate background, but the mindset should be startups.
Awesome. Thank you. I'm going to play a little game with you now. It's very simple. It's called underrated, overrated. So I'm going to give you a term or a concept, and then I'm going to ask you, if in your personal opinion, if that is an overrated or underrated concept, right? And then we can go in circles as well. It's going to be 5 or 6 those concepts, and you can tell me what you guys think. Some of them are easy. Some of them maybe you guys are going to disagree. The first concept is STEM education, or the importance of STEM education.
Overrated.
It's overrated?
Yes.
It's too hyped up?
Yeah, I think so.
Wow, interesting. I was not expecting that. That's good.
In defense of liberal arts, I would say it.
Good, great. This is
I would say under.
underrated.
Yes.
Roberto?
Under, yes.
I would say you need both. liberal arts and STEM.
Wow, this is not what I expected. This is
in the Renaissance spirit of being complete people, I think for the future you need both.
okay. The other one is what we discussed a little bit about in the talk as well. The other concept is banks investing in startups. Underrated or overrated?
Well, I guess underrated because I don't see it happening much.
Yes,
Good.
I think also underrated.
Roberto?
Yeah, like under.
I would say underrated if done properly.
Okay, that's a good thing. This is a very simple concept. I think you're all going to agree here, maybe. UX.
Well, underrated, yeah.
Under also.
Under.
Underrated.
Good,
Yeah,
good.
yeah.
No surprises here.
Okay.
This is an interesting one. Regulators.
Well, underrated. For people starting startups.
I'm not quite sure, but I can agree it is under.
Roberto?
I must say, I'll always emphasize this, how this is important, so under. Yeah,
Underrated. Josipa?
I agree. I think they're market makers under the hood, so yeah, underrated.
Awesome. This is a very interesting concept of in the time that we're living, remote work. Underrated, overrated?
Underrated.
Also under.
Yeah, under. Yeah.
Good, we all agree here. This is a very common one, blockchain.
Highly underrated.
Over.
Over.
I'm kind of neutral on this one.
Wow, we're going to talk afterwards as well. This is an ecosystem concept as well. Government support investing in a startup ecosystem.
Overrated.
Overrated?
Overrated, I can agree.
Under.
Underrated.
Yeah.
I think underrated, and I think examples, for example, from the UK of tax incentives, especially for individuals, prove that point.
So that's about the regulation, not actually government funds.
Actually, government trying to build an ecosystem.
That's underrated.
Underrated.
Yeah,
That's
okay.
Last one is a concrete example, for example, of a company, Revuto, just as an example of a challenger.
A bit overrated, I think.
I think under.
Underrated?
A big over, and maybe I will give you also a sentence. So, also in this startup FinTech story, yeah, they are still struggling with finding the right business model. Yeah, as you see, last year results was around 105 million pounds minus. Yeah, so I think it's
What happens with a lot of large startups
Yeah.
starting from Uber onwards, right?
Yeah.
Josipa?
Same, negative margins, we don't like that, so. And,
Awesome. Well, unfortunately, we are out of time. I could do this for much longer. Thank you so much. This was great. We're going to hopefully talk a little bit outside at a safe distance. Thank you very much for coming to Shift, and hopefully see you all next year when things are hopefully back to normal. Let's, fingers crossed. Thank you, everyone.
Thank you.
Thank you.
Thank you.
Thank you.